Do we have a Sharpie?
Yeah, why?
Sharpie. Somebody sign. Some.
Wait, who do you want to sign, Eric?
Who's hotter right now?
Eric can do this one.
From the side angle? No, yeah.
The best part about that photo was were the standby guys who were just like taking it all in. Like one guy with a Yankees cap, just like.
Does he have? Why doesn't he have handlers that stop that sort of thing from happening? Do you think? That doesn't sound like a big investment.
He even was like, I don't know if this is a good idea right before he did it.
No, it's definitely not. He should have people.
A terrible idea.
He should have people that say things like, "Oh, you know, Mr. Wang would love to, do that, but we can't allow him to." Move along.
If somehow this is not a top, not saying it's a top yesterday or today. In fact, it's not top.
Oh, he literally autographed the top.
Like,
you guys thought that good-looking Dan Ives in the New York Post was the top. No, I'll raise you one.
Yeah.
It's Jensen.
But
doing what he
if
just did.
this is not if we're not near a local top, then nobody can ever call anything a top ever again.
Eric was just on air like 5 minutes ago being like, this isn't a bubble. So you got to defend this, man.
Mention a magazine indicator or anything. Nothing matters if we're not near it.
You're saying if Nvidia goes up another 100 points, we can stop saying
we can
that
retire
there's
top
any
signals.
such thing.
Yeah.
But
forever.
the first time I saw that photo that was on the For You page for Twitter, and I swear it was like within 5 hours of it happening, and every tweet was, "Oh, that's a top."
It's so because it's such an obvious. It so obviously should be.
I was.
Well, it also costs nothing to say this is the top, right? Like, what do you? If you're wrong, who cares?
So I was at a New York Tech Week event right before that happened, and it was all about public relations, and I had just said I have to applaud Jensen and Nvidia's approach to the public. He's really out there talking, and the second I walked out of there, I had a text being like, "Oh yeah, man of the people."
Yeah. He's running around a nunnery with a Sharpie, just signing chicks left and right. Well, listen, you almost nailed it because he has actually been the most well behaved of the giant. Him and Tim Cook, I feel like are pretty unimpeachable. Mm-hmm. I guess they all kind of are, except for Elon, right?
Yeah.
Like Nadell is boring. He doesn't offend anyone ever.
Jassie's all business.
All business. Sundar Pichai is he's had social issues within the company, but they have nothing to do with him.
Right.
Elon,
he's just putting the fire out.
All business, no shenanigans.
Yeah. They're all pretty big. Did you hear about the Texas anti-woke stock exchange? Are you excited about this? Did you read about this today?
Well, I read about it.
Okay.
I just came back from the New York Stock Exchange.
No
I didn't
Disney.
see
Way too woke.
Disney's that allowed to be listed.
It was crazy woke
right.
down
What
there.
is this?
So BlackRock and Citadel are among several investors who raised $120 million to get approval for and launch a stock exchange that's based in Dallas. It's not going to be like a physical floor. It'll be electronic, but the home of this thing will be in Texas, meaning it'll be subject to Texas law. So I think
they're going to be anti-decimals.
Well,
I see them going back to 22.
They want to go back to
5/8.
eighths. Okay. I think the idea is that the rules on the New York Stock Exchange and the NASDAQ are maybe like too onerous or there's too much wokeness. Like the NASDAQ tells you how many women you have to have on your board. And we all know women are terrible at business. And it like there are things that there's a backlash against in society, and this seems like it's another expression of that. I think if you're Citadel or you're BlackRock, it's not about the social issues. I think it's just another way to make money, right? But it'd be interesting to see if they can get any listings.
Is this T plus 10?
T plus yes, Texas time. It's ready when they're ready. So the last new stock exchange, the long-term stock exchange, which launched in 2019, has 2 listed companies on it.
Wow.
So
they just had the wrong marketing. I mean, if you just brand it as anti-woke, now everyone's going to just pile right in.
Now, are you saying anti-woke or are they literally saying that?
No, I don't.
That's
I don't
their
use
branding.
That term. That's what they're not. Let me clarify. BlackRock and Citadel are not saying that. The news reports are that there's a growing audience of business people who are not down with some of the things the exchanges are forcing them to be down with. And so it's being interpreted as, hey, this is Texas. We don't give a shit about social issues. all we care about is making money and, blah, blah, blah. That's why you would list on the exchange. Texas has more Fortune 500 companies than any other state. Did you know that?
No.
I think it's more than 20.
Well, Elon was trying to fight his comp package by going to Texas,
threatening leave Delaware,
Court of Chancery as opposed to Delaware. So maybe all financial. Maybe there's a move to get all financial stuff down in Dallas.
One of the things in the report was that exactly that they want to be in the Wall Street Journal. The newly formed Texas business courts, established as an alternative to the Delaware Court of Chancery system, is another sign of the state's growing stature. The courts are center stage right now as Elon Musk's Tesla holds a shareholder vote on whether to move its incorporation to Texas from Delaware. Musk tweeted, quote, "Never incorporate your company in the state of Delaware." So yeah, that's like a big part. That's a big part of this.
Isn't that going to be a tough sell, by the way? Like you have this big moment, you have you're going public and, okay, why did you pick the Texas Stock Exchange? It's like, well, we—
Signaling.
Yeah, it's—
anti-virtue signaling. Well—
it adds risk to your IPO, though.
So in a way it does, in a way it doesn't. And Matt Levine wrote about this today. Since the advent of Reg NMS, we have a national market system, which means it doesn't matter where your exchange is domiciled. By law, the investor placing a trade is going to get executed on whichever exchange is offering the best price at that moment. It's instantaneous.
But the signaling, it's like you got to keep the main thing. But you're signaling to the market that this is your corporate value as opposed to your corporate value is to make money for shareholders.
Well, so they would argue—
Wait, is this ESG, this exchange?
No.
It's like, ESG is one form of signaling and this is another form of signaling.
Right.
And like if I'm thinking
ESG.
about buying into an IPO, like I just want to make sure that the CEO and the board is focused on making money for shareholders. Well, that's why
that's their argument. Their argument is the listing fees that we're paying as a public company and the compliance regulations that have nothing to do with running the business, like how many Pacific Islanders or LGBTQ people sit on our board of directors, which is literally a NASDAQ directive right now. Like the people that would list on the Texas exchange are the people that would argue.
So implementing all those rules
implementing
all those rules costs money.
That's what they're saying is the reason to do something different.
Could they just get rid of all KYC, AML? Just we're just gonna let it fly. Whoever shows up here.
So that's right. So I don't know how—
take your money.
I don't know how much leniency there's going to be about regulations that are federal regulations just because you open a new exchange somewhere. Right. It's not like Texas is Eastern Europe. Right. It's not like a free-for-all. It's still part of the United States. But the idea is listing. So here's the difference. Your stock could trade anywhere. We have 11 exchanges in the United States, like large enough ones. It's where you're listing as a company and you pay listing fees. So when you hear a company chose the New York Stock Exchange versus NASDAQ, or vice versa, there's a package. It's the listing fees, it's the visibility. Do we get a bell ringing when we go public? Will we get the flag hanging outside the thing? Or will you put our name in Times Square? That's a whole— so this is that kind of thing where it's like, actually, we're going to list in Texas because we love freedom and eagles and hot dogs and,
Is there a private credit fund that gives you exposure to the company's listing on that future exchange?
Well, there better be, or else I don't get out of bed for anything without private credit. All right. Anyway, I was just curious to see if would you buy a stock listed on the Texas Stock Exchange or the TXSE as we call it now?
If it was Tesla.
Yeah.
If Tesla redomiciled, relisted on the Texas Stock Exchange, of course
this is the funny part. Nobody would notice.
Right.
If Tesla moved its state of incorporation from Delaware to Texas, which seems like it's likely, pending the outcome, which we're going to talk about later, would any investor care in real life? Not really. We have investors buying IPOs in companies that are telling you in the S1 you have no voting rights.
Right.
Investors are like, fine, I don't want them. Yeah. None of the large cap tech companies, I think with the exception of Apple and Microsoft, actually have shareholder votes that count for anything. Zuckerberg is a boy king. Alphabet separated the voting shares from non-voting shares, 12 years ago. So it's I don't even think investors care about where a stock is listed. It used to determine how many letters were in your ticker symbol. If you were NASDAQ, you were 4. If you were anything 3 or less, you were New York Stock Exchange. That doesn't even matter anymore.
I think it would be funny if, like, I guess it would be Greg Abbott, the governor, if he sort of pulled an A16Z where he's sort of like, founders are everything. Founders are always right in Texas, and that's why you need to come here, and we will.
If he just started if he started VC threading about founders on Twitter,
it's a requirement.
Yeah.
Those multi-part tweets on X, you got to do it.
Alex, who did you bring to your first interview?
My first, okay. So I dropped this in the doc. I saw just the craziest tweet going around today. And it's a screenshot from Fox News and said, during job interviews, employees say recent college graduates have. And I thought the start of the list was bad. 53% struggle with eye contact. 50% ask for unreasonable compensation. Okay. 47% dressed inappropriately. 27% used inappropriate language. 21% refused to turn on a camera during a virtual interview. And I'm like, okay, this sounds like Gen Z. And then I saw the last part, and I almost jumped out of my chair. 19% of Gen Z or college graduate applicants brought their parent to their interview. Brought the parent to the interview.
There's no way.
Hired.
I mean, okay, so
Hired.
this is...
But only if your parents will do the job for you.
Do you believe this?
So, I mean, I had to write it because it like made the rounds on X, and I had to write like, has anybody seen this? It's a survey, a December 2023 survey of 800 employers.
I don't believe it.
Let me just say this. If 19% of college graduates brought their parent to the job interview,
no fucking way.
Everything is going to shit faster than we think.
Yeah.
Fake.
Yeah.
Sorry, this is not a Fox News thing.
Wait.
That survey is fake. 100% fake news.
Have you ever heard of someone bringing their parent to an
never.
interview?
Of course not.
No, never. And I've been
absurd.
on this earth for 5 decades. Can I ask you one thing though?
Yes.
Which of these things do you think is most accurate? I would say struggle with eye contact.
Yeah, that's
1 out of 2 Gen Zs.
Yeah.
Can't look at me in the eyes when I speak to them.
As for unreasonable comp,
Right.
that seems fair.
That does
1 out
seem
of 2,
fair.
sure.
Yeah. I think the rest is spot on, but the last one maybe makes us question the veracity of this survey.
You know what's use inappropriate language? Only 27%.
I know.
If this were Gen X, it would be like 80%.
I do think we need to cut them some slack. Like they have not had human contact, right? Because they basically went to college virtual for most of the time.
Nobody gets slack. There'll be no cutting of slack.
A tiny bit of slack for these kids.
No. There'll be no. I don't do.
Or guess what? Guess what? The first 5 responses are real, and Fox News just said, just throw this in so we go viral.
I mean, it went viral, so mission accomplished.
I mean, it wouldn't be the first time. We ready to go?
Yeah.
Yes, you guys are on your feet with anticipation, excited for the show today. I am. Ladies and gentlemen, Big John, what show is this?
Compound and Friends, episode 145.
Today's show is brought to you by Crane Shares. On Tuesday, June 11th at 10 a.m. Eastern, they're doing a webinar with former U.S. Ambassador to China under the Trump administration and former U.S. Ambassador to Singapore under the Obama administration. On it, they will be discussing how either Trump or Biden will approach China in their second term and the impact of the U.S. presidential election on U.S.-China relations and how those relations could affect the U.S.-China financial markets and everything else in between. See the link in the description to register for the Crane Shares webinar on the election and its impact on U.S.-China relations.
145. You guys, when Michael and I originally had the concept of the Compound and Friends, the main idea was we're going to hang out with our friends. That's why it's called that. And we're going to bring people back on a regular basis that we just want to check in with and we want to see and we want to hang out with. Well, what a show we have for you today. We have 2 such gentlemen in the house. Who do I start with? Do we do this alphabetically? Do this seniority?
A for Alex.
I don't know. All right. Eric Jackson is the founder, president, and portfolio manager of EMJ Capital Limited, which he founded in 2017. EMJ is a Toronto-based hedge fund focused on AI, ML, long short analysis on tech companies. Previous to EMJ, Eric was a managing director at Spring Owl Event-Driven Partners and co-founded Iron Fire Capital. Eric, welcome back. I think this is your 3rd or 4th time with us.
Yeah.
All right. So we're doing something right.
Yeah.
Okay. We always have so much fun when you come here. We actually have some notes from the last time you were here. So that'll be fun. We'll go back to some of that stuff. Alex Kantrowitz is the founder of Big Technology, a newsletter and podcast about Amazon, Apple, Facebook, Google, Microsoft. He also authored Always Day One, How the Tech Titans Plan to Stay on Top Forever, which debuted in 2020.
Good call.
And a
So far,
current
so good.
CNBC contributor. Alex is also a returning champion. Welcome back.
Great to see
All
you
right.
guys.
Roaring Kitty returned this week. Will Morgan Stanley kick him off E-Trade or just pray that the SEC does it for them? What do you think?
Texas could go after Roaring Kitty.
No, seriously.
Yeah.
Texas will put him on the flag.
I don't understand what E-Trade's. He hasn't done anything wrong.
Okay.
It's like
It doesn't look.
tweeting gifs.
It doesn't look like he's manipulating prices based on short-term options trades.
No more than when Dan Loeb writes a letter and
Yeah.
drops it publicly, or like Bill Ackman
So
goes
I
on
think
TV.
I think so too, but not everybody agrees with us.
Oh, well, yeah. No, I see nothing. Like he's built a reputation, and he's profiting from that reputation.
Would you
with
change
one stock.
Would you change your mind if news came out tomorrow that he sold all his calls before expiration this week or whatever?
No.
In other words, would you look at him differently and look at his online antics differently if he used the rally on Monday as exit liquidity?
Which he didn't.
Which I'm not accusing
has
him
he
of.
tweeted since? Like is he doing like daily updates
I
now
don't
on
know.
Reddit or something like
It's
that?
on a place called Stonk. I don't want to make this up. It says Stonk Threads or some shit like that.
Oh, he's playing it like Buffett.
Yeah.
I like it. Okay.
I was puzzled and a little disappointed, I have to admit, when he basically, the first version of the story, when he started just cryptically tweeting out movie clips and all this kind of stuff for it was a week, I think. And then like Friday, 4 p.m. close, he's just like E.T. gets in the spaceship and goes home. And I was like, what? It's like, I thought this is the guy that was gonna like get into like the value case for GameStop and all this, and we were kind of gonna experience that again, round two. And it was just that seemed like just hamming it up to cash out like on the second or third day.
What do you think what do you think of this theory? He wants to be back in court. Or I think he testified before Congress during COVID, so it was via video.
I like the stock.
Legendary.
He wants to do a freedom of speech thing. He wants to do a thing like, I'm an investor. I'm allowed to buy. I'm allowed to tell other people I bought. There's nothing that I'm doing that's against the rules.
You can tweet gifts.
You absolutely can. And he's not giving people financial advice. And he's not registered. And so long as he's not serving as like the mechanism for somebody doing a pump and dump, which nobody has any evidence that he is, he should be able to say what he wants.
Non-public information. What is he doing? He's tweeting.
But he wants attention, Michael. He
Sure,
does.
yeah.
He wants people to know what he's buying, and he's got to be happy with the reaction.
As does Dan Loeb and every other activist who puts out letters.
Right.
Dan Loeb would say, I write a letter to the board of directors, not to Dear Teen Vogue.
Well,
and I'm not looking for publicity. I'm looking for a board of directors to respond to how I want the company to be run.
Fair.
Is that fair?
He hasn't even tweeted anything other than gifts. He hasn't said anything about the stock, has he?
No. No.
He doesn't need
no.
to.
It's just
Well,
like,
no.
He's
just
tweeting
goes through
movie
his
clips.
Put his
issues.
account up.
Right.
no, there's
Put
been
his account up.
Yeah.
Right.
No, I think all of these guys, Roaring Kitty, Dan Loeb, Bill Ackman, they want to get rich.
Yeah.
Each trade, they want to make a lot of money.
Well, that's
They-
why
I love that
all-
we're lumping them. Dan Loeb, Bill Ackman, Warren Kitty.
Well,
I love it.
I saw Dan Loeb
Warren Buffett.
Somebody tweeted to Dan the Roaring Kitty's like lines of like this is 120 million in stock and whatever 170 million in options, and Dan's response was like the Ali G
Respect?
gift respect.
Yeah.
By the way, Dan Loeb started his career on Yahoo message boards
Right.
pseudonymously,
Right.
not unlike Roaring Kitty, right?
I mean this guy.
So game recognized game.
I fell off my chair Sunday night when I saw the size position he has in GameStop, and immediately the tweets that I was reading was going around like this guy wants to be a billionaire.
He's going to buy the Raptors.
And there is something to what Josh is saying, though, that he wants this publicity, right? Be this free speech warrior. you feel that drug of that first time around. You lead this revolution, quote unquote, against the institutions, even if it wasn't really exactly
Dude, they made
what
a
happened.
movie and
they
Paul
made a
Dano
movie about
played him.
And then he sits at home and he's thinking, what do I do next? So you return back to the drug. But also to your point of like, should they kick him off or should they not? Very interesting that he's using E-Trade now and not Robinhood. And
I said that
Robinhood
messed today.
Messed
What's your
with the
opinion about?
investors.
What's your opinion about why?
Because Robinhood, remember during the height of the moment,
removed the buy
Robinhood,
button.
yeah, exactly.
Well, E-Trade is thinking the exact same thing. They're not dumb. They're like, look what he's not using Robinhood anymore. Look what happened to Robinhood.
So this question of like which we started, are they going to kick him off or wait for some government body to do it? They're not kicking him off because if they do that, like it's not just him; it's everybody else sees. The damage that Robinhood did in the middle of this GameStop thing was tremendous to its brand. Investors felt they couldn't trust it. If Morgan Stanley does this, it's going to hit them. It's going to hit back.
You're right.
I want to counter that.
Counter away.
Morgan Stanley's traditional users are not on Twitter. They bought E-Trade, and maybe the average E-Trade user is active on social. I don't think these are very profitable users trading for $0 on payment for order. I don't think they care that
But
much.
it's options. It is profitable.
Options trading is profitable. What Morgan Stanley really doesn't want, to your point, they don't want to be in the eye of the storm the way Vlad was.
Yep.
Don't be the story. That being said, I think they would love for the state of Massachusetts to demand that they freeze this guy's account.
Somebody else do it.
No, you
That's
know who would
fine.
love it?
I think they would love
Keith
that.
Gillis would love it.
And Keith would
because
love that.
that would galvanize the tribe. Like, again, it's the man trying to take us down. He would love that.
He's probably sitting there like in front of his computer like, I wish a motherfucker would. Please freeze my account.
How would that even work, by the way, like practically? So he's got these
They
positions
could
in E-Trade.
liquidating trades only.
Okay.
I've had to do this as a branch manager a million years ago. If we had clients who were free riding stock, meaning they would authorize a trade with their broker. If the stock went up, they would just sell it, not pay for it. And it was like no harm, no foul because there's a profit. If it was down, they would like ghost. They would disappear. So I actually had an on-the-record interview about this at FINRA because during the financial crisis, we had brokers pitching clients, potential clients. Clients say yes. I authorize, buy me 500 shares of whatever. And then the stock would be down 12 points because it was a financial crisis. And they would say, I'm not paying for that. I'm not paying for that stock you bought me 3 days ago down 12 points.
Right.
So we had situations where people had existing accounts, ghosted on a purchase. You restrict the account to liquidating trades only. That's what something like this would look like. But he hasn't done anything legally wrong. You might not like how he's making his money with tweets, but like,
I kind of love it.
there's no securities regulation that says that he can't show other people his portfolio. So my attitude is let him do what he wants to do, but I can understand why there are people that are really against it. So
I think he made a blunder in terms of like splitting this up into two parts. If he had initially come back where the guy leans forward on the chair, tweet, and back that up immediately that Sunday night
with the
his
screenshot,
portfolios.
where would the stock be? 60?
I mean, it went to 60, I think, on its own, on the
40 something.
just the guy leaning forward.
Yeah.
So I think that was the opportunity. And now, like, what's the second act? If he's not going to do
It's
a
at
YouTube,
$30 today. It's up 15%.
I mean,
today.
I was surprised. Yeah, like it dropped down, it came up.
You sell stocks short. I know it's not what you're known for, and you're not an activist short seller.
No.
You would never get involved on the short side with stuff like this, would you?
I think it would rip your head off. Like,
Yeah.
it's just not worth it. No.
So I saw Andy.
There's
Andy
easier
Leff
ways to lose
started,
money.
Yes.
I saw like Andy Leff started tweeting about this thing again. 4 years after, he's like, I'm never going to do activist short selling. And he's like, he's back, and I'm like, oh man, God bless this guy. I wouldn't want any part of this thing.
Right.
So, all right, let's keep moving. We're going to talk about Apple. WWDC is next week, which I think, what does that stand for?
Worldwide Developers Conference.
Okay. Why is it called? It's always been called that. Why is it called that?
So Apple basically does these two different types of events. One is like a device unveil, which is like, here's the new iPhone. And the second is, this is the developers conference. This is what we want outside developers to build into our operating systems on our devices, App Store, et cetera, et cetera. So it's going to be a moment for them to go to the developer community and say, here's the ways that you can work with us. Because without the developer community, the iPhone is basically just a piece of glass. Like you need the developers to build it on top, and this is the moment where
Jobs did
everybody
the keynote
comes
for
together.
Jobs did the keynote for this one also historically.
It was the Jobs show.
Is Worldwide Developers Conference where we got our first look at the first iPhone, or did they do that at one of those one-off events?
I think that was a one-off event.
That was a
yeah,
one.
I think that was a January event.
In
and these are
06, and then it came out in 07, something like that?
Something like
Alex, is there typically a big reveal here, or what do we expect to learn?
Well, usually at WWDC, no. Like it's mostly operating system focused. But this year we're expecting something very big, which is that this is going to be like the biggest announcement Apple will make at WWDC in years, because this is when the big AI announcement is coming. And now there's been a lot of trickling out of like what might come, and we still don't know the full details. It initially started with like some really small things and some really just like kind of meh things that you would hear, like better voice memo transcription. Like, okay, if that's the big announcement, might as well not hold the event. But as we've gotten closer, we've heard more and more about Apple trying to make big changes to the operating systems themselves with AI. And that could mean, for instance, using Siri to operate different devices. Here's one example. They could, this is from Bloomberg, they could ask Siri to summarize a recorded meeting and then text it to a colleague in one request. Or an iPhone could theoretically be asked to crop a picture and then email it to a friend. So basically, the idea is they're going to use AI to combine everything that's going on on your phone and save you all the tapping through and all this busy work you might have to do just to be able to make your stuff execute simply. So there's going to be operating system side changes, and then we expect them also through a partnership with OpenAI to introduce a much better Siri that's actually not a pain to talk to and has like some of this cool chatbot functionality that we've seen come out in ChatGPT baked into the iPhone via Siri.
It seems like there's two stages of AI now. The first stage is turning these personal assistants into actual personal assistants, where they really can do things like, hey, Siri, transcribe this meeting. Hey, do you mind if Siri listens, right? And like have a meeting and then summarize or pull out all the stats or the key points. And then the next phase is agents, an AI agent where you can say, hey, Siri, get me tickets to Taylor Swift next month. Make sure I'm in like no higher than row G, blah, blah, blah. And that's it. You're not screwing around with credit cards. You're not opening apps. You're not doing what's my password. Like literally, you have an agent out there on the web accomplishing a mission for you. That's the part that I'm really excited about. I know we're not there yet. Can Apple feasibly be the company that builds that, given that they're basically trying to build on top of OpenAI and not really their own LLM or whatever? Like, what am I misunderstanding about that potential?
Yeah, so there's two parts to that question. Can Apple be the company that does that? Yes, definitely.
They can build the AI agent.
I think so. I mean, they're well positioned. They have the hardware.
Well, what have they ever done before?
So that's the second part of the question, right? Which is given the fact that they had to rely on OpenAI. The fact that they're bringing OpenAI in is something of a failure. We know that they were slow to adopt this technology. There was another report in Bloomberg that said that one of their AI heads thought, like, who needs another chatbot? Well, first of all, they had one running in the device, Siri. Yeah. And second, a lot of people wanted it. So they'll have to be able to prove that they can do this, not just by using their size, which they've done, or by refining, but by inventing. And that's been something that hasn't come easily to Apple, although they have done the Vision Pro. Like, that's an invention for sure. They need to basically find a way to build that, because if they don't, we're going to see more scenarios like the one we saw just now, which is that they're going to rely on a third party. And Apple does not want to rely on third parties because it knows what it's like to have to rely on a third party, because so many third parties rely on them. And they squeeze them for all the
Let me ask you guys this. So our buddy Dan Ives tweeted that WWDC represents the most important event for Apple in over a decade. I'm skipping ahead. He says, we believe AI adds $30 to $40 to Apple's story. I'm curious, how do they
per share
monetize this?
Of earnings?
I'm going to guess per share. Where does that multiple, the incremental revenue, the earnings, the market cap, where does that come from in the AI story?
I'm skeptical. I'll disagree with Dan on that one. I mean, if Apple was at 165, I would have said, they're being underestimated in AI, and you got to get behind it. And it's not true that the Google and OpenAI are the only AI game in town. At nearly 200 now,
They're already getting. You think they're already getting the benefit of the
I think
doubt
so.
of whatever they're going to unveil?
My guess is that this thing is going to drop post WWDC, the stock price. You know, it's. You remember when everybody used to live blog Apple earnings?
Yeah.
And we used to say like, "Oh, we're 2 minutes into the keynote and the stock is up," and then like 7 minutes later, like, "Oh, the stock is tanking." And
So
stuff.
you think this will be an underwhelming AI announcement? And that won't be enough, given how much the stock has already appreciated into it.
Even if it's functionally brilliant, or when it is in your hands, it is exceptional. I think there will be an immediate like, this is nothing.
I think it's a decent call because the stock is right near an all-time high. Like it's right there.
Mm-hmm.
And does it deserve to be? Fundamentally, no. It's all in anticipation of what they're going to say.
This is Monday,
Yes.
10 a.m. Pacific time, which
That's
is
right.
1 p.m. New York time.
They better deliver. Eric, you're right. They better deliver something.
Yeah.
Is this the most under pressure Tim Cook has ever been going into one of these events, do you think? I feel like it is.
Definitely. I mean, this is the thing about running these big tech companies. It's all about your ability to adapt. You think about Microsoft. Why is Microsoft the most valuable company in the world right now? It's because they were a desktop operating system, and they saw two shifts coming, and under Satya Nadella's leadership, they adapted. Under Steve Ballmer, we're going to make the most profit as possible from Windows.
Yeah.
But then Satya comes in, and he's very good at adapting. He said, no, we're not going to do this desktop operating system company anymore. We're not going to install, and we're not going to spend our time installing servers in people's offices. We're going cloud. They rode that cloud thing. They had given it away to Amazon. Now they're a strong number two. That's really helped them transform themselves from like an old stodgy company to a company that has a piece of the future. And they did it again with AI.
Okay.
And that is a cultural thing. For Apple, like, yes, it's Tim Cook has to be able to show that he can also lead an adapting moment because he was blessed. He came in, Steve Jobs basically, and it's not all Steve, but Steve Jobs handed him a lead in the most important device, for the next decade or more, which is the phone. And it's still going to be the most important
Well,
device.
who's the next guy? He's 63 years old. Is there any talk about succession planning? He's not old, but
Who? Cook?
Yeah.
Well, Cook did the watch, and Cook did the AirPods, and those are the number 1 and 2 best-selling wearables ever.
So those are great inventions, absolutely brilliant business
They're
moves.
just bolted onto
But
the ecosystem
correct.
that already existed.
So if you think that AI is a computing shift, which everybody in Silicon Valley seems to think that it's going to be, that will require an adaptation within Apple.
Okay.
To say, listen, we have the iPhone, we're going to ride that, but we need to prepare ourselves for our next era. And that's much harder than inventing headphones.
Especially at $3 trillion.
Exactly.
Not a lot moves the needle when you're that big.
Well, I think the most amazing thing that Apple has done is that 5 years ago, everybody measured them on price to earnings. And the people back then were saying, it's too expensive relative to his historical norms on an earnings basis and what more. And Apple changed the whole model to, this is a subscription.
Yeah.
You and your family are buying more stuff every year. You might not buy a phone every year, but you're buying iPads,
Yeah, don't
you're buying
value us in
AirPods.
hardware.
And so think of it as a lifetime subscription.
It was brilliant.
And value us on a more like a price to sale basis.
You're right, because
And
they were valued at 13 times, 15 times earnings for a long time.
Right. So they went from like a 2x price to sales to, I think they're now like 4x or something like that. And so that is the brilliant thing. But what makes me nervous about the AI stuff is that it's incremental in terms of like, is it going to make you want to buy a new phone this September?
Look, this is a wild chart. This is their price of sales. It was basically under 4 from 15 all the way to 20. And then there was a gigantic leap forward, and now it's 8 times.
Because in the first half of this chart, it was a company selling consumer technology, which is gadgets, which sucks.
Mm-hmm.
In the second half, it's ARR.
Mm-hmm.
It's-
And that's another similarity with what Alex was saying about Microsoft. Same thing. Ballmer, price to earnings.
Yeah.
Satya, subscriptions.
Yeah.
At the wazoo.
But also, Eric, wouldn't you argue that there is some risk here for Apple? We don't necessarily see the incremental gain, right? Obviously, we don't see the obvious incremental gain. But I can promise you there's going to be one company. We've seen sort of hints at this with Humane and Rabbit who've tried to do their own devices and they've sucked. But someone's going to say, we're doing an AI phone. And you can't ignore that if you're Apple. Because there is a chance, if it works according to specifications and AI continues to improve, that you could be behind.
Who's the leading candidate to try to pull that shit? Like a Qualcomm?
Probably
Or an
could-
Amazon?
I think it could be it honestly could be some like random startup that takes Android and finds a way to wrap Android together with some AI technology, maybe from OpenAI, and find a way to build this new device.
What does that mean? What's an AI phone?
A phone where like the main way that you interact with it is through artificial intelligence.
I would say that there is precedent for that. 3Com was and also came up with the Palm Pilot. Legitimately, at one point, was eating into Nokia and Motorola. What we have sound in the headphones.
It's Bryant Park.
Oh, so this is part of this is what we're doing here. Pretend we're out there. Actually,
Welcome to New York.
yeah. So it has happened. All right, I want to keep.
Just one more thing.
Please, go
Let me
ahead.
give you one more candidate here. It's Sam Altman. Sam Altman and Johnny Ivey.
He could do a device. Is he funded to do devices?
He's been talking with Johnny Ivey,
Okay.
who worked with Steve Jobs to build the iPhone, the head of design, about building a hardware device.
Okay,
So it could be them.
that would be dangerous for Apple because
Which would be a Microsoft device?
Well, this is where you get into the real weirdness here, because like, first of all, Microsoft has like funded OpenAI and they're running on the servers. Now OpenAI is going to do this big deal with Microsoft with Apple, and Satya Nadella and Sam Altman had to meet to discuss how this would work operationally. But beyond that, and there was a great story in the Wall Street Journal this week. Sam Altman who's the CEO of OpenAI, does have various conflicts of interest. He has the startup funds where he's funding with his personal money startups that are like working with OpenAI. And OpenAI is doing deals with them, so it gets tricky there. My understanding is if he does a device, it would be separate from OpenAI as well. And then you start to get into some strange territory.
So, Alex, your book is How Tech Giants Stay on Top Forever. Do you see any risk, like clear and present danger for them, other than maybe this OpenAI company, or are they just going to be the winners for the next 10 years that we keep on talking about?
who's they?
The
Apple?
Max 7.
Okay.
Max 7.
Yeah, I mean, so it's called always day one because the best thing about being in your first day as a startup is you build exactly what the market needs and you don't worry about legacy, right? Because there's no legacy to worry about. Whereas bigger companies tend to
They don't want to cannibalize whatever's making them money now.
Exactly.
Yeah,
so they spend all their time hanging out on legacy and they just miss what's coming next.
Media is a great example. Paramount.
Yeah,
And all those
absolutely.
companies.
So I do think, by and large, and we're going to talk about Amazon later, which may be the one that's at risk, but by and large, these companies are the ones that have been able to adapt over and over. And even when you count them out, like remember we're all counting out Meta like about a year and a half ago.
Google.
They find ways. Google, exactly. They have baked into their culture this ability to adapt and then tackle the next computing system. And by the way, their size doesn't really hurt in these
Don't
these
you
moments.
think the fact that so much of their business is digital, that they're able to adapt continually versus the incumbents of the 60s? It was physical. It wasn't digital.
Digital
they just
helps.
couldn't.
Definitely. No, it helps. And also there's awesome moments that happen in this world because think about Meta's play in artificial intelligence. Sometimes you're building for something, it doesn't work, or you invest, and then you're very quickly able to pivot to something else because you've made the investment. And I'll just kind of flesh this out a little bit. Meta bought hundreds of thousands of GPUs
For the metaverse.
Yeah, not for reals.
Actually, no, for real.
No,
They
for
say
reals?
it's for reals, but reals, metaverse.
No, but wait, in the beginning it wasn't for reals, or was it?
I think they saw TikTok, and rightly, as an existential threat. They invested in all these GPUs from Nvidia. We're a very early customer because you need a ton of artificial intelligence to run the recommendation algorithms on Reels. Just as they had made this investment and were improving Reels, they saw how big AI was going to be, and they were able to train much better than so many else because they weren't supply constrained. They had the Nvidia GPUs. So this idea that it's digital and you can change quickly, it takes a nimble mindset, but it is easier in tech because you can use the sort of the technology that you were betting on for something else and quickly pivot there if you have that strength.
So had they not bought all those GPUs for the metaverse, and let's say they were 12 months late to this game, would the market cap look a lot different than it does today if they were so far behind TikTok?
I think so. I mean, you guys were talking last week with Stephanie about how so much of the way that people value stocks is sentiment. And what would the sentiment be on Meta right now if they had completely missed the AI moment as
They didn't
opposed
have
to
Llama, and if they didn't,
They could be
Correct.
toast.
Yeah.
they are looking like a leader, and because just this fortuitous bet they had made on the GPUs has really helped them.
I want to get into some stock stuff with you, Eric. But before we do that, from Alex's last show here, you were on with us October 6th of 2023, and I was laughing. I was rereading some of the stuff that we were talking about. I said one of the biggest risks to the market, I still think this, is a hiccup to the AI story. Like if something goes wrong, or if there's some like, random drop off in demand that nobody was expecting. Like mathematically, these companies are so big. That's a fundamental risk to the market, not the economy. The market. Your argument was Nvidia still has room to grow.
Good call.
That was right.
1.7 trillion cents. Up that.
You said the real hot take is that OpenAI versus Meta's Llama AI product is the real battle, which might still be true. We just don't know yet. The Mag 7 are up, if you equal weight them, in total return 37% since that October appearance till now. So
Crazy.
they all still had room. Interestingly, Tesla is down 33% since then. Nvidia is more than helping to balance that out, up 155% since then. So good call. Good calls all around.
You know what's funny? Eric was on just a month later,
Yeah,
and we titled the show "The AI Moment Comes to Wall Street."
it did. All right, so Eric, you were with us a month later, November 3rd, and S&P is up 21% in total returns since then. The 10-year is actually slightly higher, and I'm just going back through some of your stocks. Carvana was an absolute freight train.
What a call! What a call! Nobody liked it then.
I didn't buy any. Up 213%. Top performer in the Russell 2000 over the last year. Up 582%. And the 39th best performer year to date, up 93%. Well done.
You made some money there.
Oh, yeah.
Good for you.
Are you still in Carvana?
Yeah.
Okay.
Still in it. Still
So
like it.
give my audience the next Carvana, if you will. I want to hear your Nvidia thoughts. So you're still bullish. So am I. I'm just like a very nervous bull because now everyone is bullish.
That's true.
I don't know if you could tell, but I'm a little bit of an iconoclast. I don't like to agree with everybody. And I find basically now 60 analysts are bulls on Nvidia, a couple of neutrals in there, no sells. And we have all just decided Nvidia is the biggest AI winner now and forever.
It touched tips today with Apple in terms of market cap.
They hit
Go
3 trillion.
easy with that terminology.
It touched tips. I'm just saying.
We're not going to do touch tips.
They did.
All right.
It took me a second to
kid.
figure out what
This
Batnick
kid's
was
too
saying.
much. It's
My
almost
God.
too much. What's your Nvidia thoughts these days?
I still think it's inexpensive. I wouldn't say cheap. Okay, it's inexpensive, and I think that's pretty remarkable when you consider how much love there is, and it seems to be like universal love for it. But what's amazing is if you look back at the last 5 years on a forward PE basis, Nvidia up at the end of 2023 was like one standard deviation below like the mean for that period. Like, and yet the stock had an incredible 2023. It started the year like 146, ended the year 480 or something like that.
Yeah.
And so I think, people just fundamentally couldn't believe that a stock that had run that much could be cheap.
They've never seen earnings growth like that in a company that size.
Right.
It just doesn't take place.
And they thought like, okay, maybe May quarter that just sort of like everybody sat up and took notice was just an anomaly, and we're going to go back to kind of normal growth.
Yeah.
And yet,
They did it 3 more times.
yeah, and like they,
Right.
it keeps going. So right now they're at the mean. They're like 38x forward PE, I believe. But this is the stock that has, if it was one standard deviation above the mean, I'd say this stock's expensive and you might want to lighten up. The thing is, in the last 5 years, there have been periods, I think 3 or 4 times in the last 5 years, where this thing has gone like 1.5x standard deviations above the mean. If it did that now, it's a $2,200 stock.
Oh my God.
Eric, it was
pre-split.
38 times forward a week ago. Now it's 45. I mean,
I
the
stand
move
corrected,
is
Mike.
just ridiculous. So what?
Devil's advocate, as companies get larger, their valuation should get lower because like growth becomes harder to come by eventually.
For every other company.
But I know that hasn't been the case here for a while.
So Eric, what of the bearish arguments, and I'll just throw it out there, do you think are total bullshit or not as big a concern? For example, the fact that half of their revenue base comes from 4 customers or whatever the number is. Like, what do you think about that?
Just like these Mag 7 companies that Alex was talking about before. I mean, they're going to be here for a while. They're not going anywhere. They're not going to be disrupted tomorrow or next week by OpenAI because they are throwing off gobs of cash. And so they have this sort of core stable business that is likely to continue to throw off cash for a long time. So they can spend the billions on the H100s, H200s, and B200s.
One way around that concentration argument is that the hyperscalers are not the end customer.
Right.
They're a conduit. The end customer is every other company on earth and every municipality and every country that wants to build things on AI. So if we think of Microsoft's purchases of Nvidia, it's scary because they're probably 10% customer. I don't know.
Right.
But Microsoft's customers are, I don't know, where they have 500 million customers.
Yeah, there was like a sinister line from the Nvidia conference call a couple of weeks ago. It's like talked about sovereign AIs.
Yeah,
and then the idea was like, the UAE and Russia and Singapore are like building their own AI using this stuff. And
well,
so
we don't want to sell the UAE the highest tech version of Nvidia chips. There's like security reasons why the government is telling Nvidia not to do that.
If
right?
they invest $7 trillion in Sam Altman, then maybe they'll get those chips.
Here's another one. These companies spent $60 billion or whatever the number is on these chips last year, and it only drove $3 billion in revenue. What would you say to something like that?
Listen, I'd say the best bear argument against Nvidia is like, where are the apps? And how many people are making money off besides Nvidia making 75% gross margins. You look at some of the recent results for like Dell and like HPE just this week. I mean, a lot of companies, they're selling all these AI servers and they're not making hardly any margin on it. So Nvidia's in this kind of weird position where it's sucking up literally all the profit in this space. And so is that sustainable? Probably not.
So that's the last question for me on this is, where are the competitors? Who is going to go, like, legitimately go head to head with Nvidia?
Everyone and no one. So
years behind.
Everyone is announcing AI equipment, software, and chips, but no one is going to be like the Pepsi to Nvidia's Coke.
But isn't this like how we were taught about competition? Is that when you have abnormal profits, somebody comes in and competes?
Tell Google that 25 years, no competing search engine. It doesn't always work the way you think it works. It doesn't always look like McDonald's.
Well, no competing search engine, but competing ad networks, Facebook.
The thing with NVIDIA, well, anyway, I'm sure you guys know this, but they have both the hardware, the chips, and the software that developers train large language models on. CUDA, yeah. So this is a momentum thing, right? They have so much momentum in terms of like people who are developing AI. This is high stakes for most companies. It's the top priority. They know they can do it with NVIDIA's combination of servers, chips and software. And so to switch off is a big risk. Even if the other chips are performant or they're cheaper, like you have to spend a lot of money for these NVIDIA chips, but you're not going to like risk your company's competitiveness or your number one priority to try to get a discount. And that's why NVIDIA is going to maintain this lead for a while. But I think Josh is right in saying like they are selling to an end customer and the end customer needs to see ROI there. And actually, if I can take you guys in quickly to like how the tech industry is thinking about this moment, like it'll sort of give us some thoughts about like where this might go. So I think there's like two tracks on AI development right now where those end customers are taking these chips and what they're doing with this compute. The first is that we have technology today that's actually quite useful, like GPT-4o, GPT-4 from OpenAI, the latest models, these latest cutting edge models. They're going to be put into place in a lot of interesting ways, especially in enterprise computing. That's why you see companies like ServiceNow doing crazy numbers in earnings because they've figured out a way with the technology we have today to build it into something that is going to be worthwhile, and why Microsoft is selling these $30 a month seats in Office because they're like, all right,
for Copilot.
They're like, this technology we have today is good enough that we can sell you a service worth $30 a month. The thing is that even to build on that, the tech today is 50% cheaper and 2 times faster, which means that OpenAI's GPT-4o release offered better technology, so smarter technology that's faster to build on.
Than 2.0.
Yes, than 4. Than 4. So wow. 4, it's better than 4, and it's faster than 4, and it's cheaper than 4. They cut the price in half. And so all these developers, all these tech companies that we're going to do on the current technology, that we're doing these ROI calculations of should we build, Now they're going to go build because it's that much cheaper. So you can get an ROI in places that you couldn't get before. And that is the belief. And so there's a belief that the current technology that we have today is going to already spark an increase of development. And we'll see where that shakes out. It might be that it's like very useful for law firms, but not for consumers. And that's where this current generation of technology lands. But the big thing that's going to happen, and every tech company is pushing towards this, and this has been a big part of NVIDIA's revenue, is that there is a belief within the tech industry, within the big companies in particular, the OpenAIs, et cetera, that over the next 18 months, we're really going to see what happens to these models when you put way more compute, way more CPUs or GPUs towards it, and way more data, right? Because the more you put in, they've increased, like you put in, X amount more, they've increased exponentially. And so now they're buying up big time to try to make these models better. And no one knows, like, where they're going about to throw like a god amount of compute and a god amount of data, like as much as you can.
All the usage making these models better? So they're not just training on the internet via 2 years ago, but like they're training every day with actual human prompts and queries. Is that like improving the service?
Yeah, that's like the refinement of the models. And they do some integration, so you can get the internet on like Bing, for instance, with its AI. But this is going to be the biggest test for the tech industry and like, I'll say like recent history, is whether that 18 months of development, which is where all this money, not all of it, but a huge amount of this money
it's why Nvidia is worth $3 trillion.
It's exactly. Right. It's on this bet.
Okay.
And if these models continue to improve exponentially in 18 months, I'm telling you, we're going to have people saying we've reached artificial general intelligence and the products are just going to be insane. But if that doesn't happen, if it's just incrementally better, then the air can come out.
So where do you place your bets? Is it going to happen?
Man, I don't think it's going to happen on the timeline. I think it was going to take longer. I think basically there's going to be a ceiling to these techniques. And then they're going to have to find new techniques. The research labs are already saying we're going to do more than just put more compute. We're going to start to refine a little bit. But it is GPT-5, which OpenAI just announced their training. Although they didn't say GPT-5. It's going to be really good. But I don't think that like we're going to see artificial general intelligence in 2 years.
And so what does that mean for the price of these stocks? Like, in other words, is this like fiber optics cable with the internet where, yeah, it was a thing, but we pulled so much of it forward that the valuations, the prices, all that, it just couldn't possibly be sustainable? I
think there's a floor, but I can't tell you right now like whether these like Nvidia is sustainable and whether they're going to even leap even further if this technology proves its potential.
Alex, one of the things I predicted was a mania, and I thought there'd be like 1,000 IPOs by now that were AI this, AI that. And Eric, you point this out. There is no GovWorks.com. There is no CMGI. There's
Where's the bubble?
Supermicro and what's VRT?
Vertiv.
Vertiv is like cooling off servers.
Liquid cooling for,
Fine.
basically make the data.
So, all right. So
gone
those
from 12 to $100 in a year.
Those stocks are crazy, but like there's not 20 of them and they're both profitable, I think.
Yeah.
Ish.
Well, just
enough
breaking through. Yeah. I mean.
Right. So what we didn't get this time, probably because of where interest rates are, we didn't get the rush of Me Too copycat bullshit where like you just like rename your company AI, go public, $4 billion valuation.
You know it's not a bubble.
We don't have that.
NVIDIA side, even the ticker AI is like not doing anything, right? If there was a bubble, this thing would be up several 100%. You know how many stocks doubled in the S&P 500 in 1999? 39 stocks were up more than 100%.
We don't have that right now.
And where the like you would think like is another chip company going to come around and like overtake them and knock them off their perch? Like you would think like there'd be a little bit of pixie dust in some of the multiples for these other nothing. It's just and Nvidia itself, like what I'm saying is like it's not trading 2 standard deviations above its historical mean in terms of like its prior valuations.
AMD either, like Micron either. The stocks that should be the most caught up in a frenzy, if this truly were a bubble, are just not acting that way.
Right.
And the people talking about them are not speaking that way. Like even the biggest bulls seem to be like hedging how excited they want to get.
Counterpoint, NVIDIA added $300 billion in like 72 hours.
Exactly. I think that part of it is this, why we're not seeing the small guys come up or the really weird valuations for others is because so much of this moment is predicated on scale. Like without scale,
Right.
you can't play. And that's why Nvidia is gathering so much of the benefits and why we're seeing companies like Meta and Microsoft and Amazon and Google. That's all we talk about with AI. Because if you're not them, it's very difficult to play.
You still like Dell and ARM?
Yeah, I do. So I think there's going to be some others that come along for the ride with Nvidia.
Yeah.
And I think Dell, I mean,
What's the Dell story? I don't know anything about the company other than
Dell was like nobody was paying attention to it because it had recently
PC
become
business
public from
historically.
PE.
Yeah. What else do they do? Honestly, I don't know.
so PC, think of like, you turn
They
on
make
Jack
beige
Ryan.
or gray boxes.
no, I have one, but other than that, is that still the core business?
So like half and half. They have that, and then they have this network ISG business, which is basically, we'll come into your Ritholtz Wealth Management. We'll set up your servers. We'll sell you the networking gear, the professional services to do this. So we'll sell you all these AI servers now. We'll sell you storage, and so the thing that I like. Dell. I mean, a couple of years ago, this thing was like a 4x forward PE. This thing was dirt cheap. Now it ran up to like mid-teens, just prior to their earnings a week or so ago, and now it's like dropped it down like sub 10 again. So relative to like a super micro at like, I think it's like almost 20x,
Yeah.
and a Vertiv, which is like was 30x forward. It's nothing like that. Now I think those guys will come down, but I think Dell's got to come up. And the thing I like most about Dell, besides just a value play, is that they're selling these AI servers. They're not making that much money today. But the thing is, when everybody deploys these servers, not everybody wants to run them in the cloud. A lot of these companies are going to want to keep their stuff on-prem. Dell's there for them. They set all the servers up, and the other thing that Dell sells is storage. And so you got to spend money on storage if you're going to be manipulating these models and stuff. And a couple of earnings call ago on the Dell call, somebody asked if, how much for every dollar in AI servers that you guys are going to sell, which was $1.7 billion in the last quarter,
Wow.
where they didn't show much operating margin at all on them. And that was like what Tony Sacconaghi and others got kind of mad at them for. But they said for every dollar of those AI servers, it's not going to happen right away, but like a quarter down the road, 2 quarters down the road, how much storage are you going to sell? And, is it going to be something like $2 to $3, in storage, which is a good margin business? And the COO said, yeah, you're not far off on that. So I think they will make a shit ton of money on storage. And then, of course, professional services.
Did they buy EMC? What's their storage business based on? They must have bought somebody.
I think
So
that's
it's
right.
VMware.
VMware,
They had a
maybe?
relationship with VMware.
This stock is up. This stock's up 400% in 5 years, versus the S&P's up 100%. This has
Right.
been a huge home run since it became public.
I think before their earnings, where they were down like 18% the next day after earnings.
Yeah.
I think they were year to date ahead of Nvidia on the year in terms of. So people sold it off because of the operating margin issue. But I think they're going to see more storage business.
What's the story on ARM?
Last thing before you get to ARM, just history was made today. Nvidia, the market is closed, and Nvidia is now larger than Apple.
We did it.
Wow.
I knew this was coming.
Holy shit.
We said this would happen.
3.01 versus 3.02. Unbelievable.
It still seems wrong.
Unbelievable. It
Josh,
seems wrong.
you said your number to sell was $3 trillion.
I think
you're
I
going to
have-
sell.
Dude.
I think I have to sell some more.
If they go to 1,700, which I think is possible by the end of the year, they're going to be $4 trillion.
Oh
market
my
cap
God.
company.
It's all right.
Why not?
What's
Crazier things have happened.
what's the story on ARM?
So ARM,
It's an expensive stock. It almost got bought by Nvidia a few years ago.
Yeah.
which would have been really interesting.
which says something about I think why you should be interested in ARM. They're 90% of the float I think is still held by SoftBank, because SoftBank was sort of like
Are they back? Is SoftBank bank?
Well, Elliott, the activist hedge fund, just bought a huge chunk of SoftBank and may tell them to sell the rest of their ARM holdings.
Yeah, and then weirdly, ARM was up like a lot today, even before.
That's weird.
Up 9%
And
today.
so you'd think like if SoftBank's going to dump this stock, it should pressure the price and that should go down. But I think what people are thinking ahead to is that SoftBank sees something of enormous value here. There's a reason why they only sold a sliver at the IPO last year when ARM came public.
Yeah.
It's a CPU focused company. It's not a GPU focused company.
And think about when the stock splits.
Yeah. So I think there's value here. I mean, there's rumors that they're going to be the chip in the iPhone that comes out this September. The big thing is their royalty rates are going up a lot this year.
Why?
So
they just decide to?
as they kind of come out with new versions of their chips, they're able to kind of hike the prices. And so several years ago when they started, they were getting like pennies in royalties per unit. And now by the end of this year, they're going to have a lot of chips out there getting a 9% royalty rate, which is much higher than what it was a year ago. So they had a big moment in February where their earnings like really, in terms of their guidance, surprised people. It was the stock like was up an enormous amount, like 40% in a few days and stuff. So I think there are going to be more surprises to the upside this year, even though it still looks expensive on a price to
You are still
basis.
bullish. Carvana, it's $100 right now. You can go to 200, it could go to 350.
This thing
Is
went
this AI.
This went from 350 to 3.
Can I say one thing?
To
we have
100.
one of these towers now, Michael and I. 10
That's
minutes,
hilarious.
On Long Island?
10 minutes away from
So
our
off
house.
Meadowbrook.
It's right off our parkway.
So now you know why they were losing money
It's
all
not
this
like
year.
terribly impressive. I don't know.
Is that
What-
a sideshow? What is that? That tower?
That's the business.
Well,
you
no.
put a big giant coin into that,
no, that's like
and
a,
the car
that's,
comes
that's
out.
a gimmick. No, that's not the actual business.
Well, that was the knock for the Bears against this company for a long time. It's a gimmick. It's
Wait, it was
they never made
car
money.
vending machine?
Yeah, you literally take
It's a giant glass.
It's going to 350.
It's a giant glass tower with used cars in it,
Like
and they look
Matchbox
like
cars.
they look like toys.
Yeah.
You buy it, and they let you put a big fake coin into a slot, and the car comes spilling out of this tower. I'm not even f***ing with you. Like, that's the business.
Yeah.
Okay. And the guys that ran it have a colorful history, or are they still it's like a
Father,
father
son.
and son?
yeah.
Used car aficionados?
Right.
Okay.
Right.
All right. You like Coinbase. Why do you still Coinbase has been a huge home run for you also. Stock's been a big winner.
I think crypto can blow up a lot more from here on out. I think probably all of us at the start of the year would have been surprised if we'd said this.
Yeah.
And
And that's
Bitcoin.
definitely good for Coinbase because they're in every part of the ecosystem.
I guess the ETF wasn't bearish. That was dumb. No offense.
That was I thought the ETF would cannibalize Coinbase's retail business.
Yeah.
Maybe it did, but it doesn't matter.
But the institutional business.
Yeah.
But they get custody fees from that. So like, there's no more FTX. But we're going to talk about Binance later. But,
Yeah.
they're sort of like gone. So they're the big, pure play, public crypto stock you can own. I mean, there's like Bitcoin miners and stuff like that you can play
the
around
thing with
with.
Coinbase is that they're much more profitable on retail than institutional, obviously, right? But the people that the OGs of crypto, the people that have been there forever, they're not going to an ETF, number one. And number two, they want to trade it 24/7. That's like the whole deal.
Right.
Is that they can trade it at 8 o'clock, at 1 a.m., whenever they want to buy it.
Real
They can
crypto
do it.
people aren't terribly interested in the ETFs other than the fact that they've brought a lot of liquidity into the space.
But it's circular because the ETF has driven up the price and then it gets these people more excited to
Yeah,
buy
yeah,
and
yeah.
sell.
Right. And now we have ETHs.
Guys, I want to make sure we get to we want to do Tesla and Amazon.
Let's start. What do you guys want to do?
I want to do Tesla because I love this chart.
Throw up this chart. It's so pretty. So Chart Kid Matt made a chart showing that Tesla has gone 648 days. It's making an all-time high, which tied the previous record. So de facto, today or tomorrow, it's going to break it. Okay, simultaneously, it's in a 57% drawdown, and there is a lot of smoke coming out of what Elon is doing with some of the financing of the company and the chips and all that nonsense.
So I wanted to set this up. Most of the long-term bulls in this stock are sellers, with a couple of notable exceptions. But you have a stock that's down 30% this year in the midst of a tech rally. It
Worst
actually
of the
looks,
Mag 7.
Yeah, worse than the Mag 7, but it actually looks worse than a lot of the car makers too, which is interesting. Michael mentioned it's in a $600 billion drawdown, 50 some odd percent. And now you have sellers. So Gabelli sold their entire stake.
Wow.
66,000 shares that they acquired in early 2022 in Q1. We think the stock works best when there are auto company fundamentals that justify the stock price.
Dude, it's under.
Hold on. 18 mutual funds tracked by Morningstar that have held the stock since 2019. 10 of them reduced their positions in the last quarter. 4 of them slashed their stakes by more than 15%. Only 5 actually added. So, Ross Gerber is a seller now, which is that notable? It's notable because he's like the most violently.
No,
I think Ross and Dan had a fight.
Ross turned a while ago. I feel like. What about Ron Barron?
He
So
was on
Kathy
TV
is
today.
buying. All right, Kathy is buying, and Ron is. I don't know if he's trimming, but Ron is like Team Musk in the pay dispute. So Ron Barron of Barron Capital says that the company, in an open letter, the company should pay the $56 billion pay package to Elon because of his accomplishments. It's the ultimate key man of key man risk.
True.
Ron, interestingly, has a 27.9% long position in Tesla in his flagship. His second biggest position is 12% SpaceX. So I think he
Betting
likes
slightly
Musk.
on Elon. Yeah.
I think he likes Elon a lot. Ron Barron estimates that he bought his position for about $400 million between 2014 and 2016.
Wow.
And that
Legend.
position netted him $5.5 billion in both realized and unrealized gains
Applause that.
in the
wild.
less than 7 or 8 years since then. It's pretty
impressive.
baller.
Happy with that return.
It's underperformed General Motors by 50%.
So by the way, no surprise. He's for paying Elon the money. Like he's like a lot of long-term shareholders. have
Are
done
any of you
really
guys
well.
not in favor of paying Elon the money?
I think you give him the money because
Yeah.
it's a contract.
I mean, they
No other
struck
reason. No
they
other
struck-
reason.
They struck the contract in 2018.
Yeah.
I went back and I watched the video clip of like when they announced it on CNBC, and all the it was like the Squawk hosts were in Davos, and they were like, "Well, they signed this contract, but he's got to make
Stock was going to zero.
He's got to make this stock go up like 5x for him to really get paid."
And he
he's
did.
got to chuckle, and
So
he did.
what do you guys think about this headline from CNBC? Elon Musk ordered Nvidia to ship thousands of AI chips reserved for Tesla to Twitter and XAI.
It's ultimately like there's a huge risk in having Elon involved in all of these businesses. Like his involvement he just raised $6 billion for XAI. And he has to make it work, and it's all about scale. And now he has some explanation of how these chips were just going to sit in a storehouse, and Tesla couldn't put them to automatic use. First of all, why? Like, come on! Like every CEO can deploy these. You mean you had these on order and you couldn't figure out how to use them in Tesla, which is relying on AI to build self-driving? Like, it doesn't. The explanation doesn't fully make sense. But even if it was the case,
You think this is chicken? You think he's publicly showing Tesla shareholders, hey guys, I got options. There's other things I can focus on. I got rockets, I got Starlink, I got AI, and if you don't give me 25% of this company and $56 billion cash, I'm doing other shit.
it's probably part of it. And it's also just the risk. Like Elon's he has great vision in seeing where the tech world is going, right? Like Tesla, SpaceX, who knows, maybe even XAI are like really good bets on the future.
The brain implants.
Yeah, the brain implants.
The holes underneath Las Vegas to send cars through. Yeah.
Well, maybe not that, but you can't take it away from him. But eventually, and everyone was like, as long as he's involved, it's going to be fine. But eventually the bills are going to come due. Like, and no one can possibly spend all this time on so many diffused bets on the future of technology and dedicate 100% of themselves to it. So he's stretched thin, number one, and the resources are stretched thin. And he has this kind of mode where he'll just like toss everything toward a problem. And now that's going like first of all, it's his time, and now it's the resources. And I think that's a problem.
Here's a Carl Quintanilla tweet, quoting Morgan Stanley's, Adam Jonas. Without Elon Musk achieving a 25% voting stake in the company, we believe Tesla shareholders should be prepared for Tesla to significantly slow down or curtail its direct investment in sensitive advanced AI efforts. So if you own Tesla for the AI, that's not good.
Yeah, I think he knows exactly what he's doing. I think he's
going to get paid.
He's like, you guys are going to do this, or I'm out of here.
Here's my scorching hot take. I think he's gone. 50% chance he's gone. Stepping down from Tesla leadership by year end. It's not because I don't think it's fun anymore.
What puppet comes into that role?
Dude, one of his cousins or something. But like, I mean, it'll be fine. I don't think there's as much intellectual stimulation being forced to build like economy cars. Like that's not what gets him excited. So now you have an auto manufacturer trading 64 times forward earnings in an industry that trades 5 times forward earnings, heavily reliant on the whims of the Chinese government. The Shanghai facility is like really key to their profit outlook. He's got all these encumbrances as a public company and all the regulation that comes along with that. Now he's being forced into going further down market, make $25,000 rolling boxes to compete in, a market that looks nothing like the Model S and the really cool shit that he started off building. It's just less sexy. It's less daring. So I think the August 8th taxi announcement is like almost a Hail Mary. If that doesn't set the stock on fire again, I think he's going to be like, what do I need this for?
Yeah, well, I mean, the full self-driving is a really good technological challenge for him that Tesla's actually making progress on him. Like the people that I've spoken with that have tried this version 12 have been blown away by it. Actually,
but that's the August and that's the August announcement. If people aren't excited about it, then
I mean, if they're able to achieve that, then we're talking about a whole different discussion than the one we are now, because right now they're just a car company with AI promise. Here's my question to you. Let's say this does happen and he does step down. Does Tesla stock go up or down?
Up.
I mean, it's 2024, so up.
I think it crashes.
I'm with Eric. I think it crashes too.
But he's still going to be a shareholder. He just doesn't have to be the CEO.
How about this? It doesn't stay flat. One of us is going to be wrong.
I'm on that.
I mean, where did they go? Like $100 at the end of 2022? And then
he doesn't want the stock to crash though, because I think it's the foundation of a lot of his other stuff still. He's borrowed against it. It's like I don't think he would do something in such a way that crashes the stock out of spite.
Right.
I just think you can't be the CEO of everything. It might not make sense to be the CEO of Tesla day to day. It might make more sense for him to just be chairman and then focus on space, which is probably coming public next year.
Right.
So,
but he has like a very strong number 2 in SpaceX and Gwen Shotwell. So maybe he tries to find a really strong number 2 to run Tesla. But I do think like Tesla is still fairly expensive.
So what's the odds of him saying I'm not the CEO anymore?
I'd say plus 370. I'm making that up. What would you guys say?
I'm saying coin flip.
I think coin flip.
You agree with me?
I think there's a better chance.
Even money?
Yeah.
I would go 75%.
I go with Michael.
25%.
It seems like a long shot.
You think it's a long shot?
I do. I mean, it's closer to that than a coin flip. They have all this frigging data. It is intellectually stimulating for him. If
think it is?
If this is an AI and robotics company, not a moving box company on wheels or whatever, then and they've got all this data that nobody else has. So if you're going to do stuff with all these,
it's not just
Nvidia
a car
chips.
company.
Yeah.
Come on, it's just not.
Optimus is pretty cool. The
What is
robot
that?
they
humanoid-
built.
the humanoid robot.
It's a huge priority within Tesla, and I saw a video of it being able to like pick clothes out of a basket and fold
But once
them.
again, if he owns 80% of XAI, I'm just making that up, but let's say directionally, and how much of Tesla does he own? 13?
Well, he wants 25.
No, I know,
what
but
he's-
what
I
is
know he's
his-
down to?
You know what I mean? Like, there's nothing stopping him from saying, "Oh, actually, I think I'm going to do R&D on that over here." That's the danger to Tesla shareholders.
Well, he's always been like he's taken people like who are key in Tesla and SpaceX and brought them into Twitter.
yes.
So
He's not above
Is
doing
he,
that.
the most, is he
absolutely.
the most powerful executive of the last 50 years? Is that crazy?
I think so. I mean,
Power like over his own entities, 100%.
Just influence.
Yeah.
owning Twitter definitely like increases that level of power that he has. He's got the control over a town square. He's got a leading car company, leading space company, cutting edge neural
Government
If Steve Jobs
infrastructure.
had kind of pulled this sort of stuff at Apple, I mean, arguably he could have been seen as more powerful because he could have said, "Hey, folks, I'm out of here if I don't get X, Y, and Z and stuff." I mean, he never went there. He was happy at Apple. I think what makes Elon a credible threat for like taking his baseball and bat and going home is that he's done weird stuff. Like he went through the Twitter acquisition.
He rescued Solar City because his family members were in it. Like he just decided, oh, Tesla's buying it. Nobody said shit. Like internally, who could?
Short sellers did, but that was about it.
Yeah, but I'm saying internally.
Folks on
I mean,
Twitter.
he gives no fucks at all about
None.
anything.
And,
so that's the risk.
And also does things sporadically and then thinks about them later.
Yeah.
which so far has worked out okay for him for the most part.
There was a
but-
great moment in the Walter Isaacson biography of him where he goes, "Oh, maybe I shouldn't have bought Twitter."
$49 billion later. Amazon. This is, if you ask me what I'm most bullish on in of the Mag 7 as an investor, most bullish, not as a technologist, that's not my area. I feel as though Amazon's about to have a big moment. I think it's probably belongs at 250 right now, and I think ultimately, like this is one that still could double. It's about $1.7 trillion market cap right now. It sounds like you have the opposite view.
Yeah,
from
I'm
a
really
technology
eager to
perspective.
hear. I'm really actually a culture perspective. I'm
Okay.
really eager to hear why you're bullish on Amazon because I'm probably missing something.
Yeah.
And I also like tend to look at these companies culture first, then products, and then money.
Okay.
Right. And
so I look
yeah.
so I look at it as there is no consumer or business AI story without Amazon Web Services making a lot of money as a result.
Right.
It's a $100 billion run rate business. If it were a standalone company, it would be S&P 50, I would guess, on a valuation basis. And it's literally the linchpin of what everybody's ambitions are in AI. Like, if you want it to work, it's got to, in some way, be hosted here or be able to run here or be connected through AWS. That's the ultimate toll road through which a lot of this AI stuff's going to run. So that's one thing. Two, Jassy built AWS. This is not like they did a talent search and they got a guy from Pepsi. Jassy was there in 1997. Jassy was Bezos' shadow. That was his first job. Come with me into meetings and then tell me what you think afterward. This is the guy. So people thought Apple was a short when Tim Cook took over. Apple made way more money as an Apple shareholder under Cook than you did under Jobs.
And by the way, Satya built Azure for Microsoft.
Yes. Yes. So, Alex, no offense, 9 billionaires just piled into Amazon stock last quarter. Let me give you a couple of names. Izzy Englander, that's Millennium. We don't know which team within Millennium, but that's, is this 2.4 million shares? Andreas Halverson of Viking, 1.9 million. Chase Coleman, 1.4. Jeff Yass at Susquehanna, Ray Dalio, Dan Loeb, Ken Fisher, Ken Griffin, Philippe Lafont. These guys are all buying the stock at the same time and amassing big positions.
I own 10 grand worth of it. Not to brag.
Michael
Batnick.
So tell me the counter about it being day two mode, because I haven't heard anything like that. I'm curious what you're hearing.
Yeah, and look, the financial story can be totally right about Amazon. Like they do stand to, we've talked, I think, last time about how they've taken this bring your own model approach. So whether you're running OpenAI or whether you're running Llama 2 or Llama 3, like you're going to be able to run it with
Bedrock.
AWS or Bedrock, right?
Right.
And they're going to make money. They're going to need people to deploy it through their systems. So I'm not disagreeing with that. Like the billionaires, like they're probably going to all make money. They're very good at doing that. So here's my perspective on Amazon in terms of direction. And it might take years for this to play out. And this is like the concern I have is that, and we're going to do a bigger story on this, so I'm not going to give away all the reporting, but basically people within the company have said that it has a very like day two mentality right now.
Meaning they're slowing down or they're maturing.
Slowing big company, but also that the things that are going to get investment within Amazon are the things that are making money right now.
This sounds exactly like what I want as an investor.
But the things that weren't making money right now, like in the earlier days of Amazon, was web services, right? Like they were the bookstore. And so they decided that they were going to take this, sort of day one mentality, invest in what might be the future. So it might be nothing, but there's definitely like this feeling within Amazon that they're becoming more stodgy, more big company, and they might be able to make a lot of money on it for a long time. But it does, I think, open themselves up to some sort of risk.
They're not as daring.
And then, I don't think so. Not under Jassy. And maybe that's what the market has called for, and they've responded for sure. But I do wonder, like, if you look at them next to Microsoft, I feel like I look at the and AWS just had a really nice quarter, but you look at the Microsoft Azure numbers, and their growth is like every quarter, like within the high 20, 30%. And of course, off a lower base. But Amazon was like 16, 17. Yeah. I think they had of course, a higher base, but like they're growing more slowly than the others. And you're starting to see Google Cloud come on, and Google, of course, like they have their own AI play. I'm not like ringing the bell and saying run away from Amazon. Obviously, there's a lot of potential there.
I want buybacks.
Yes.
There's a rumor of a dividend coming, which it's amazing to think that Amazon might be a dividend payer.
Right.
There has historically been no reason to, because reinvesting that same money back into AWS has been a way better investment for them. But like that's part of maturation, I guess. What are your thoughts, Amazon?
I'm with you. I think
Okay.
I think these guys actually like when you sent the notes for this show. I hadn't looked. I've owned Amazon off and on, but when I looked at kind of the same metrics of like forward multiples and all this kind of stuff, what surprised me the most about Amazon, I hadn't realized this before, was that I think they were the stock that peaked first
Yes.
post-COVID.
Yes.
So you know how Kathy's ARK fund like peaked in like February 2021, but then the Mag 7 didn't peak until like November of 2021.
Yeah.
Amazon peaked at a 70 forward PE in June of 2020.
It was the
So
ultimate
basically,
stay-at-home stock.
Yeah, for 3 months, it went up enormously, but then it's been going almost straight down ever since. And at the moment, I think it's only a 30x forward PE. So I told that story earlier about Nvidia and how at the end of the year, last year, people thought like this thing is expensive because it's gone from 150 to almost $500. But from that forward multiple perspective, it was cheap. And I think the same is true with Amazon, because Amazon now, I think over the last year plus, it's gone from 80 was the low to 180 now. So it looks like it's almost gone straight up.
And it had done a 20-for-1 split.
Yeah.
So had it not done that split, this would be a 4-digit
Right.
company.
So
putting up some of the best earnings growth they've ever put up.
right.
So by the way,
I presume these big guys now they're looking for a big stock because they got big capital to put to work. So and that's a consideration as well. But I assume that their thinking is that this thing eventually it's going to re-rate higher. It just can't stay. Maybe it's not going to 70x
Right.
forward, but yeah, should it trade at 40x forward?
maybe.
They are becoming more profitable. And I think like what you guys are talking about is spot on. And actually, it is interesting to watch how the company has shifted from a retail company to an AWS company. And you can see that even in the ranks. And this is a bullish sign for them, right? They're really all in on AWS now. You can see it in the ranks of the S team, which is the senior leadership team that used to report to Bezos and now reports to Jassy. And for up until recently, they were largely retail folks that were overrepresented there.
Yeah.
That's shifted completely. And Jassy has added multiple people from AWS into that team, and a lot of the retail folks have left.
Last thing on Amazon, they're working on their own chips. They have Inferentia, which is their inferencing chip, and Trainium, which is their training chip. I would imagine that these are for use within their own Bedrock AI environment. Maybe they're starter chips for newer AI customers whose needs aren't sophisticated enough that they need like H100s or whatever. What are you hearing about Amazon's ability to build hardware? And is the Anthropic Amazon combination an actual threat to Nvidia or to OpenAI or anybody else?
So most companies that have been training these models are on NVIDIA chips. They're very helpful for training. The other side is actually when you use the models for inference, they're actually running applications. And whether it's Amazon or any other company that's trained on NVIDIA chips, they do not want to keep relying on NVIDIA to actually use it.
It's even more expensive. The inferencing is even more expensive than the training, right?
Correct. And so they're because you train once, but you're constantly deploying to everything, and they hate how much they've had to spend on NVIDIA. So they're all looking for hedges, whether it's Amazon or Google or whoever it is. And so this chip really helps them. They also with inference, it's more of like solved math as opposed to like training, which is like experimental and so it's much easier to build on your own. So I think that. Josh, now that we're talking a little bit, like, okay, I'm coming around to your thesis.
Yeah. How many shares can I put you down for?
I'll talk off the
Will
air.
Will this be a joint account, or you want to open it individually?
Don't ghost.
You know what? We'll move everything. I want to exceed Batnick at least, and so give me 12,000.
Fair enough, Alex. You're making an excellent decision. Where can I send the confirms? Your home or your business?
I'll be back next week. But yeah, you're right. If they're going to take a piece of every little bit of AI that's being deployed, and they have their own chips, this is all of a sudden you start to see the story come together.
You're going to see some people out in Silicon Valley next week. You mentioned to us
Yes.
off air. Okay. So who are you the most excited to talk to? I know you're talking to every company. Who are you the most excited to hear directly from?
Anthropic, I would
Okay.
say. I put Anthropic. Let's do the Anthropic, not the Anthropic Amazon axis, but Anthropic number one. I think that they're brilliant thinkers about the direction of AI, and OpenAI might be the best at productizing this stuff. But I think Anthropic, whose leadership comes from OpenAI and we're responsible for some of the biggest breakthroughs, they have, I think, a vision of this software and this technology that's pretty special. So I'm excited to go into there for the first time. And then I think that this is going to be my first time visiting Nvidia, and I'm going to be down there for a full day
Where are
next
they?
Thursday. They're in the South Bay.
Okay. You gonna wear a leather jacket?
You bet.
You're gonna wear. Are you gonna wear a bra? That could be
If
signed.
Jensen doesn't sign it, I'm never going back again.
All right. Hey, we loved having you guys here so much. Thank you guys so much. Did you have fun on the show today?
It's great. It was awesome.
Yes?
Absolutely. Love
All
hanging
right.
with you guys.
All right. I want to end with favorites. I was going to mention CZ being the richest person ever to be put in jail. Michael says we could skip that. I just thought it was interesting. He's worth $36 billion, and he's going to spend 4 months at a jail that has a farm attached to it, like growing lettuce.
I
and-
love how you wrote it in the
Yeah.
in the doc farm jail.
Yeah, farm. He's gonna be milking horses at a farm jail in California. Compare that with the outcome SBF is living with, and CZ obviously won. Right.
Right.
He's coming out to a $36 billion fortune. SBF might not be coming out.
And
Okay.
SBF returned value
So-
to shareholders. So
I'll go.
True.
I'll go first for recommendations. Being that this is just a coincidence, but Alex, you're going to Silicon Valley. I am watching season 1 of the show, and
Of
it
the Silicon
is-
Valley show.
I cannot believe how funny it is. I'm howling. It is so brilliant and so funny. And if you missed it the first time around, I cannot recommend it highly enough. It's so brilliant.
Mike Judge might be the greatest satirist of the last 100
It's
years.
unbelievable.
I couldn't watch it when I lived out there. It was just way too close to home.
Yeah,
But
yeah.
it might be, it might be worth a rewatch now, especially with my wife who's like new to the US and like
Dude, and you still have the best ahead of you. Like Jin Wang doesn't
Yeah.
even show up.
I'm probably not going to make. I'm probably going to stop at the end of the season when I'm guessing.
Jin
but it's
Yang.
just, it's so funny.
What
Oh my
about
God.
Russ Hanneman doesn't even show up till like
Right,
season 3.
right.
Like the best is still ahead of you. So, all right, super jealous. I should
Legends.
start that. Eric, what do you got for us?
I thought the Chamath podcast last week on the All In podcast was pretty interesting because he talked about crypto. He always talks on those things. Like, I had a guy at my shop do a little research on
Who, Chamath?
XYZ.
I thought all the
So-
guys at the shop are gone.
So he found a guy who did.
Shout out to Chamath. Michael's just kidding.
No, I'm not. Seriously.
There have been 4 Bitcoin halvings now. We just
Yeah.
had one back in April.
Yeah, I got a
And
tattoo for
they
that
went, They found that within the 18 months after each halving, the Bitcoin goes crazy. So the first time was up 44x.
The problem is if everyone knew that going into the fourth,
So
how much
easy.
of that was
Yeah.
pulled forward,
right?
right? So, I mean, did it hit 70,000 just now?
Yes.
It did,
Yeah,
right?
I think 71.
Yeah, 71.
71,000?
Yeah. So
Damn.
anyway,
It's going higher.
it's the bump is going down. His argument is that after each time this happens, it's what leads to the increase in prices because so many more people outside the U.S. see it as sort of like a store of value for keeping their wealth in there, and so they get attracted to basically as an alternative to
Do you
gold
own
or some currency.
do you own crypto or you just own Coinbase? Like are you doing both?
Just the equities and then
Okay.
the ETFs and stuff for the asset itself. And so last time it happened that it was up 8x. Is it going to go up 8x again
No.
in 18 months? Probably not. Is it going to go up 4x?
8x from 70,000?
Right.
What would that? I'm not
So,
great at math. What would that be?
Well, I mean,
4 million?
Chamath's
Yeah.
prediction is $500,000 within the next 18 months. So
18 months. Jeez. Okay.
I've learned enough to stop fighting against people's price predictions because one by one they've all come true. So I don't say anything.
So anyway, it's
Alex,
interesting.
What's your
Shout
price
to
target?
shout to all
For
in.
Bitcoin, $1 million a coin.
Million a coin.
Yes, sir.
What's your favorite this week?
All right, I have one that I've been playing around with. Has anyone? Have you guys tried these? These are the
I
Ray-Ban
love them.
Metas.
Oh, shit.
Has anyone talked about this on the show yet?
I had
Yes.
them on my head.
How are they?
They are awesome.
I think they're cool.
So let's see. I'm going to put them on, and these lenses right here. So for listeners, it's a pair of glasses. The lenses are see-through, no prescription. You can get prescription in them. I tap the side of it. It connects to my phone, plays Spotify or plays a podcast.
Yeah.
Wear it on the train, no problem. You can listen to the show.
The speaker
No
is closer
headphones.
to your ear
Yeah.
on the arm.
Exactly.
Do they
Okay.
turn into
Yeah.
sunglasses as well, or is that a
Yeah.
separate?
So when you're outside, I think the sun, they react to the sun, they become
wow.
sunglasses.
Yeah.
So, and the super cool thing that I like a lot is that you can hold down this button. I don't think it's working. I think
And
the
you
batteries
disappear.
are out. And it takes a video. So you could take a video and
Oh.
it's going from your point of view. So I was up on
It's like Mission Impossible.
How do you charge it?
in a Ray-Ban's case. It charges in the case. So I was up on a rock climbing wall and I was like, all right, I'm going to wear these. So like you see from point of view, like as you're, picking the route and just like clipping in and falling, from like the way that you would see it. It's pretty cool. And like, we're going to go on vacation in August. I can't wait to wear it. Cause like, instead of having to take your phone out and take photos, you're just like going
I
to
think
clip.
That is really
I think a
cool.
year
Yeah.
from now, you'll be able to like go into Yankee Stadium and instruct it to tell you if you know anyone there and
So-
just scan the
oh, yeah.
place.
Oh wow, like
And it'll
Terminator.
recognize your friends' accounts on whatever devices they're on and like a snap map.
That's so cool.
So
That's going to happen.
There's AI in it. So you can say,
Yeah.
hey, Meta, what am I, like, look at this and tell me what it is.
How
Or,
tall
hey,
is this
Meta,
building in front of me? How
Exactly.
many feet high is it?
Or even like if you're like in the middle, you don't want to pull your phone out. What time is it? I'll tell you the time.
Yeah. No, I
It's
like
useful.
it. I like it. My friend
Really
Gwen
cool.
was walking around with those at the New York Stock Exchange.
Yeah.
And I tried it on. I thought it was pretty cool. I got two. I saw Furiosa. I saw the Mad Max.
how was it?
I loved it. But I would have loved it no matter what, whether it's good or bad. I don't think I'm objective.
You went to the theater?
I went to the theater, empty theater.
Yeah, of course.
Saw it in the big screen format.
I can't wait to see
The
that.
movie just beats the shit out of you. When you walk out of the theater, you just feel like you've been through something. It's just absolutely relentless. It's pretty cool to see George Miller, who started making these movies almost 50 years ago, becoming more intense as a filmmaker, not less.
Right.
This film does not let you breathe.
So more intense than Fury Road?
Oh yeah.
Yeah.
You cannot breathe watching this movie. There's maybe two scenes where someone's not getting their throat cut. And I absolutely loved it.
And what rap album?
No, Eminem's video for Houdini is hilarious. So if you want to have like a time warp experience and feel like you're 25 again, go on YouTube. It's Eminem making fun of his younger self. He's in the Robin costume again. Dre's in the video. Snoop's in the video. 50 Cent's in the video. The song's okay. He samples a Steve Miller Band, Abracadabra. It's it's an okay song. No one's gonna like remember it a year from now. But the video is a lot of fun, and it looks like he's just making fun of himself at this point, and he's having a blast. So he's not like serious Eminem, at least not in the first track. So highly recommend. All right, that's it from me. This was an extra long show, but worth it. We had two incredible guests. Eric, where can people find more of your stuff? Where do you want them to follow you?
You can X, Instagram,
Yeah,
TikTok,
all the
Eric
things.
Jackson or Eric M. Jackson or
All-
whatever. So
All the things.
Yeah.
And Alex, you are exclusively found on Anthropic.
Yeah, that's right. I'm actually the embodiment of Claude.
I want everyone to subscribe to Big Technology. Tell them where they can go to do that.
Yeah, so Big Technology Podcast in your podcast app of choice is the best way to do it.
On the Substack?
Substack, yeah, bigtechnology.com. But yeah, I'm going to be out on the West Coast, so I'll have a day of reaction to WWDC.
Love it.
Wednesday show, and then a Friday show, all about what's going on out there.
We will be listening for sure. All right. Great job this week, John, Duncan, Rob, Dan, Sean. So many people to thank. Matt, Nicole. Thank you guys for listening. See you soon.